Hey Internet, it's RJ. Welcome back. Thanks for tuning into the show today. Now, today's episode, we're going to do a little bit more behind the scenes. I'm going to talk about, some real life application of how I go through building out a plan of attack for something in the world of credit and finance. Better yet, how I look around and evaluate what other financial products can I use, yes, probably bank accounts and credit cards, to make this thing a little bit easier to accomplish or put myself in a better position. So it all makes sense in a second, but if it sounds interesting right now, I'm going to go ahead, press the subscribe button, and let's get to work. Now, first things first, this is not going to be a 100% credit card focused video, so I'm just going to let you know that up front. If that bothers you, totally understand. I'll drop something extra interesting for you down below for credit card focus. But what am I talking about here? Well, anytime you're in the world of credit and finance, I'm a firm believer that, you should always look around at other financial products, whether it be credit cards, whether it be a bank account bonus, whether it be, investing or something like that. And look, what other products can I help use to offset or help put myself in a better position for this thing I'm going to do? And so this is more so my plan of how I look around and evaluate and try to adapt these things. And so you don't necessarily need to copy my plan, but maybe this gives you some things that you can think about and learn from when you try to do your own plan. So what is the goal here? The goal is to go after a third property, right? Some of you OGs of the channel remember that this started out as a real estate channel, believe it or not. That's why we always have the house in the intro. It's a little Easter egg throwback there. But I want to add a third one, right? So anytime in life if you want to do something, in my opinion, you have to have a plan, an actionable plan to make it happen. So let's talk about this plan. So first of all, you need to know what you want to do. Third property, pretty simple. Now you need a time frame. Has to be a time, not necessarily time frame to close the purchase, but time frame to get started. And then you're going to talk about the pre-planning. So I set April as the date to start going through the mortgage process. Now, April I picked for a few different reasons because it gave me enough runway to get myself into a better position. That's what we're going to talk about. So let me talk about my thought process here, though. When you talk about the mortgage space, and I'm not an expert, I'm not a realtor or anything like that, but number one, April seemed like a good enough time because rates are ticking back up. But the thing about it, again, in my opinion, is that they're ticking back up from historic lows. So there's plenty of room to catch a good rate on the way back up. And then what that really tells me is, hey, it might make more sense. You want a variety of properties, right? You don't want them all to be, 2,000 square foot deals. You want 1,000 square foot starter home, condo maybe, full size home, robust portfolio, if you will. But since we're still in an environment of lower rates, it might make more sense to go after a more expensive, maybe your full family size house now, lock in what you can on the interest rate side, and then down the road 2, 3, 4 years when rates are back at wherever they end, then you maybe go after your starter home, something like that. So with that in mind, what do we need to do? We need to set ourselves up to be in the best possible position, because what we need in a competitive purchase market is purchase power. Purchase power is how much money the bank's going to loan you to buy this thing, right? Purchase power is a function of a few different things, credit score to name a few, but so you could, if your plan was this and your credit score isn't great, then you can start adjusting and fixing your credit score. Mine's pretty solid, but the thing that I like to focus on is what I call cleaning up my balance sheet first, because a big function of purchase power is debt to income, or DTI. And it's very simply put, how much money comes in versus how much money leaves each month, because your mortgage payment is monthly. That's how they look at it. And for most people, this probably wouldn't be that big of a deal, but I have two already, like I said. Then I have a car loan, which I've talked about, and so that ends up being in like the $300,000, $350,000 range of debt. So you're not going to clean up the houses, but the first thing is I want to address this. So I look at the sheet here, the old balance sheet. I say, what can I get rid of? Well, I can get rid of this car loan, and I've made a full video down below about this. So I'm not going to go into a ton of detail, but I use the Ink Premier card, hit the sign-up bonus by paying it off, going through Plastic and Visa Savings Edge, which nets me about $800. Now, again, you might look at it and say $800, not that big a deal, but again, car payment, $620 a month. You made $800 paying it off. If you would ACH the money, you would make nothing. So again, I think that's a win. Again, full video down below. I definitely think you should check it out because it will explain everything. I just don't want to be redundant here. So that's that. Now, another reason you pick April is because there's still another financial tool that's not nearly as sexy or talked about enough, especially on YouTube, but that is every time corporate America, if you're a W-2 employee like I am, then, about March is the time where merit increase, cost of living increases, a bonus, whatever your company calls it, that's March is generally the time where they pay out, in my experience. And so what happens here is, again, you're going to get a bonus check. If you did a decent job, you can throw that bonus check towards the car, which I did, or, you could pocket it for your down payment, perhaps. That's another thing I should mention. Anytime you're trying to pay off, clean up your balance sheet, you do have to keep in mind for this particular plan, make sure that's not going to cut into whatever money you have for the down payment. Now, again, the other thing here is, we said the merit, cost of living, raise, whatever your company calls it, also going to pay out in March. And, it never seems like a lot of money, and on paper, well, in your pocket, I should say, it's not really a lot of money. Let's just say you get $2,000 raise for the year. Check to check doesn't really do anything for you, especially after taxes and everyone gets their hands on it. But on paper, it can help a lot more. So, because if you say, look, I get $2,000, for my raise, you do the math here, divide that out by 12, again, I know there's some taxes in there and something, but, if you do the math, divide that $2,000 by 12 months, it's about $166 a month. Then you subtract the car payment. Well, again, if you add the car payment together, I should say, you're looking at $786 right there. So once again, the goal was to clean up the balance sheet and fix the debt to income. You can fix debt to income two different ways. You can make more money, you can have less liabilities. So you can look at it as we freed up $786. I'm not telling you it's going to be a dollar per dollar match on the bank side versus our side, but again, you can see that, and we also were able to use a credit card for one of them. And again, the other financial tool, again, is just your paycheck. It's not sexy, but it is a financial tool. So that's that. Now, there's another part here where you have to figure out, hey, I've got the down payment, but what do I do with it, right? Because you don't really, in my opinion at least, you don't really want to put your down payment in the market. You don't want to, maybe if you could find something super safe, it's possible, but right now in 2022, with things going on the way they are, you probably don't want to. You want something super safe, which is like a high interest rate account, but again, interest rates aren't that high. So what else can you do to hold on to this money? So for me, I have a bankroll about $50,000. So again, OGs of the channel, I love a good bank account sign-up bonus promotional offer. So I turned to Citibank. Citibank has a very high one. It's the fact that you can put in $50,000 for, I think, 90 days, and then they'll give you $700 at the end of it. So if you do the math, it's not an amazing return. It's about 1.4%, I think, if you do the math. But again, you have to put your money somewhere. You want to put it somewhere safe. So the answer is look around and see what other financial product I can get. In other times, it might make more sense to put it in an Ally with a higher interest rate or something like that. But the interest rates aren't that high right now, so what else can I do? I can get this bank account bonus here. And again, you might be saying, well, $700 is not really that much money. True, potentially, but when you have your loan coming up, you're going to have a bunch of loan costs, right? And your home appraisal, I'm picking one. Home appraisal. $400 or $500 normally, something like that. So if you get this, then that's a free appraisal potentially, or free whatever you want to look at. It's still helping, or it could go to your down payment fund. You have options. However you look at the $700 is up to you. Same with the Ink Premier. However you look at the $800 is up to you. But you can kind of see we're looking at other financial products and how we can leverage them to put ourselves in a better position. So there you go. That's pretty much it. I look around, see what I can do. And again, we've made almost $1,500. You can count it however you want, just using 2 free financial products. Now, I have a full video again about what you can and can't pay for during the home ownership or the home buying process with a credit card, and you can't really do much. And also, you don't really probably want to open too many credit cards, or you actually don't want to open any credit cards while you're going through this process. So that's probably pretty much going to be it. But if you fast forward to the last part of this, is kind of thinking ahead to, hey, whenever you close the loan, what credit card can I get? And one comes to mind that I have my eye on that's pretty much worthless any other time. That is the U.S. Bank Business Leverage Card. Now, its annual fee is waived in year number 1 right now. It's got a huge sign-up bonus of spend $7,500 and get $750 back, and it has a litany of 2% categories. One of those 2% categories is home improvement stores, which is great because we're probably going to need home improvement when we close this house. So that's definitely on the radar. And just like that, we're back continuing to use financial products, namely credit cards, because we like them so much and they're pretty easy to help pay this off. because you're probably going to need some home improvement, so it's a safe bet. Plus, there are other 2% categories in there as well. So, anyways, I'll keep you posted. Let me know down below if you're interested on the process as a whole, how it goes. But I'm just gonna go behind the scenes and show you how I think about these financial products as we go, how we can leverage them against each other to help make some extra money. I do think this, while they seem like small amounts, 700 here, 800 here, 750 for the next US bank card, they seem like small amounts, but if you think about this through all your transactions, I believe this will add up, and you think about life and all your other financial products like this, I think you'll do pretty well. But anyways, guys, if you like this one, drop me a thumbs up down below. If you found it particularly interesting, then consider subscribing to the channel. Again, posting content just like this every Monday, Wednesday, and Friday. Of course, right back here every Sunday with all the news you can use in the week that was in credit and finance. My question for you guys is, let me know what you think about these more so behind-the-scenes practical application videos. Is it interesting to you? Would you rather just stick to the regular credit card stuff? Generally love to hear your opinion on it, as well as other things, other products that you've used, strategies that you've made to accomplish your financial goals. But anyways, guys, that's going to do it for this one. As always, thank you so much for watching. I'll talk to you very soon in the next one.